Good day, everyone. How are you doing, by the way? So, if you are new to this our channel, please, before you go, I want you to actually subscribe, like, and share this video. Now, I'll be teaching you how to trade gold professionally using the technical aspects and the fundamental aspects. In this video, I'm going to explain what actually moves gold, what are those factors that affect the movement of gold price, so based on the fundamental and on the technical aspect, so we can trade our gold professionally and very well and grab enough profits. Now on this thing, how to our course is how to trade gold professionally. We will be looking at the fundamental aspects, which means we'll be using our fundamental analysis. On the fundamental analysis, we will be looking at the technical aspects. We'll be looking, that is our technical analysis. So now let's get started. We'll start with our fundamental analysis. Now, as we can see on our fundamental analysis, we want one of those factors or one of those analysis, as you can call, that moves our price is what is known as monetary policy or an interest rate. That is it. We call it the monetary policy, monetary policies, or interest rates, anyhow you want to call it, especially the interest rate. So what is it? It tells us that this is one of the biggest influence on gold price, is which is the monetary policy, and it is controlled by the Federal Reserve. That is like the central bank for the American, or other bank, like the central bank of Europe, or we in Nigeria, we have Central Bank of Nigeria, and other country has its own central bank. In America, they call their own Federal Reserve, and it is that Federal Reserve that affects the movement of gold majorly. The reason is that gold is being priced in dollar. So when there's a policy affecting this dollar rate, it affects the movement of the it affects the movement of the gold. So now, as you can see it, interest rates have a big influence on gold price because of a factor known as opportunity cost. As we all know, opportunity cost, when you forgo one to another for another in order to gain more benefits. Let's just assume now, let's see it like this. The Federal Reserve increase interest rates. There's only one way it is going. The gold is actually going to be falling, while the rate of the dollar it actually be rising, because there's more power in the dollar. The dollar is even being attracted. Let's just say that like, let's say for gold now, if you are to invest in gold, you won't be getting any interest in gold, right? But if you are to invest in bond, certificate of deposit, you are going to get more interest. Just imagine now, there's an interest rate that the Federal Reserve increase. That means the interest rate for bond will increase. Interest rate for certificate of deposit, like fixed deposit, as you want to call it, will increase. So investors will prefer to move their money to bond, certificate of deposit, than to invest in gold, because they know that they will get higher return. They will get higher return, a very good return on their investments, or where they invest in interest rates, where there's a good interest rate, than in gold, where that there's no interest rate. It's just, it can be seen as a tool of speculation or a store of value, which does not fluctuate very well, just a store of value. So investors prefer moving their money to where they can grab enough interest rates. That is why I said interest rates has a very good influence on gold price. Once interest rate goes up, then gold price tends to fall. The next one we have is, the opportunity cost is the idea of giving up a near guaranteed gain in one investment for the potential of a greater one. You see, I've just explained that one for you. So, and I want you to also know that Federal Reserve commentary can also move the gold market. Just let's assume now, like the Federal Open Market Committee, that is in America, that happens, it holds meeting once in every 6 weeks, and they discuss the state of the economy and the future of the monetary policy. If the FOMC, which is the Federal Open Committee, takes a stance that implies rates could rise in the future, that rates could rise in the future, as you can hear, then the gold price tends to poorly perform. That is it. When they try to make a decision or try to give that there's every possibility that rates could rise in the future, then the gold tends to does not perform well. But if they say that there's no plan to raise interest rates, then you see that the gold prices tends to do better. That is on it. Now, the second one that affects our gold is our supply and demand. This is it here. As you can see, number two, which is our supply and demand. And one thing about supply and demand, is like, you know, the rules of supply and the greater the demand, the higher the demand, the higher the cost. That is it. When there's more demand of a particular product but there's a little supply of it, the price tends to go up. Let's assume an example now, that there's a tomato. Tomato can is like perishable goods, right? There's more of this tomato in the market, but people are really demanding for it. Guess what? They'll have to reduce the price, so in order for people to at least try to buy it, or at least to try to attract customer. That is exactly when there's a much supply of this tomato, but there's a low demand for such a thing, so the price will have to reduce. But if there is an higher demand and this tomato is very very short in supply, you see that the price of that tomato will increase, because there are more people that are willing to buy, there are more people that are ready to spend money. So when you increase the price, you see that people would love to buy it, because it is scarcity, the rule of scarcity. That is exactly what we can see in supply and demand. Now, see, simple supply and demand economics can influence physical gold price. It can influence physical gold price. Now, as with any good or services, increased demand with constrained or low supply has a tendency to put price of that goods or services higher. As you can see, as there's an increase in demand for a particular product, but there's a low supply for, or tendency for supply of such a product, the price increases. Exactly what we just explained previously. That is exactly what possibly can happen. Now, conversely, an oversupply of a good or service with stagnant or weak demand can push price lower. That is it. Now, we can see data reports gotten from Google. I got it, I did some analysis. According to the World Gold Council, gold demand during the first half of 2016 grew 15% to about 2,335 tons. With investment demand, you still can see investment demand, there's a demand surging 16% to its highest level since 2009. However, gold supply increased by 1%. You can see that there was an demand for it, which increased about 16%, higher, whereby we saw a low supply, which is very very low. That is exactly why the price of goods increased. Now you can see during the first half of 2016, which represents the slowest rate of first half supply growth since 2008, growing demand and constrained supply has been a reason for gold price have headed higher this year. You can see, if you go to your chart on our gold chart, let's try and see if we can actually get it. I'll be opening my MetaTrader 5. and this is our gold. And let's see if you can trace our 2016 price movement. This are 2017. As you can see, this one is our 2016, right? You can see our 2016. This is February 2016, as you can analyze it here. And I'll be, this is January, by the way. This is January. As you can see, 2016 0106. That is about January 6th of January. We can see 2016. You can see our price rose rapidly. This is the analysis that was given, and this is where our gold tends, this was 2016, about first half or something. Our gold price tends to increase, by the way. You can see that the price rose up because there was little supply, and why there was an increase in demand for this our gold price. That is why we had something like that. Now, as you can see, next one we'll be looking at is the next one is our dollar to gold movement. As you can see on this dollar to gold movement, we see it as currency movement, by the way. As you can see on our currency movement, so please give me some minutes. I want to increase the brightness of this. Okay, now as you can see, this our dollar to gold movement, you can see a falling US dollar has a tendency to push gold prices higher because other currencies and commodities around the world increase in value when the dollar falls. That is one thing, is that once the dollar is falling, the gold prices tends to increase. Let us just assume like this: we have one order, we have two, we have three, we have four, we have five. Now this is one, right? We are on one now. If our price is at one now and the dollar rate tends to fall, it falls to two. That means it takes about $2 to get a particular good. When it falls again, that means it takes about $3 to get a particular good. When it falls again, it takes about $4 to get a particular gold. Have you now seen from $1 to get a particular gold to $4 to get a particular gold? Because why? The price of that gold, the price of the dollar has fallen, it has weakened, and why that the gold itself has increased in price. Now, on contrary, a strengthening US dollar often comes about because of the growing US economy. That is it. One thing is that when there's a good job, the economy is doing fine, there's investments, everything in the country is doing well, you will see that the currency of that country tends to increase in value. It tends to go up because it is doing fine. So that means when it is going up, then the gold tends to fall. The prices of that gold tends to fall because people tends to move their money into the economy to start investing more into the economy instead of just buying gold and holding it, whereby that's how it is, especially if you understand when there's a higher movement in dollar, there will be a fall in our gold, by the way. Now, a weaker dollar in 2016 has been a pivotal in pushing gold prices higher. That is, if you are to check analyze our 2016 movement, you see that our dollar was about weak, and which really make a way that it has also give a pivotal push in our dollar going higher. That is one of the reasons why once there's a fall, if you are trading your USD dollar now and you see that the index, there's a fall in the index, then they tend to be a rise in our gold. But when there's a rise in our dollar, then they tend to be a fall in our gold. Now the next one we'll be looking at is the economy. That is the economy data. So the economy data tends to affect the gold movements, by the way. So now let's start by explaining it. As you can see now on this our economic, let's just say that there's a good economic data, like the job report is good, wages is good, manufacturing is good, the GDP rate tends to increase, by the way, you see that the US economy is actually doing well, that tends to push the gold prices lower, because the economy is doing well, things is doing fine, then people tend not to invest in gold. But when the economy is trying to, not moving in a way that you don't understand it, then you see that our price of gold tends to increase. Now let's see it now. A stronger US economy, which means low unemployment, there's a good job growth, manufacturing expansion, and GDP growth in excess of 2% has a tendency to push gold prices lower. When there's a good economy, US, economy, especially the US, because the gold is being priced in dollar, that tends to push the gold prices lower. Now, on the flip side, weaker jobs growth, rising unemployment, weakening manufacturing data, and superb GDP growth can create a dovish Fed scenario on interest rates and increase in gold prices. Let's just say now there's a weak economic growth. This is not doing fine. Maybe like the things recession tends to start eating. One thing the Federal Reserve will do is to reduce the interest rate, whereby big companies can come and take money from the borrow money, from the bank, and tend to invest it. They tend to invest it in gold, in some of the economy, by the way, which tends to move higher, and people tends to move their gold, their money into investing in gold, because it is seen as a safe haven. So one thing I know, that when there's a bad economy record, you will see that the gold prices tends to increase. Now let's take a look at how I want to analyze about something on our 2020. As we can see, we had something called on our 2020 about lockdown, about COVID-19. I saw something, our gold during that period, gold prices increased. I was one of those that invested in those period then. So I mean, gold moved well. So as we can see now, this is about January 15, 2020, and we can see the price of gold, it was push up, it came down, and we can see this bullish move, by the way. People were staying at home, no jobs and everything, lower employment and everything, uncertainty. Of course, when this is exactly why the gold prices tends to increase, because no job and everything. So interest rates will be cut, people need money. And one thing is that the Federal Reserve tend to put money into the society, as I think COVID-19 package, or whatever they call it in America. I'm not an American, though. I'm not an American citizen, but there's one thing they called, package, give the people some money, they need social security to collect whatever. So in essence, people tend to use this money to invest in gold. So this is exactly why the gold prices increases. That is one thing about economic data. And now, one thing about gold movement is uncertainty. This is one thing about, or one of the reasons why gold tends to even move well. And this is exactly why what I love most in this gold movement is uncertainty. Now, this uncertainty, as you can see, is, we can have it political uncertainty, or instability is probably the best example. Now, let's do it like this. Now maybe there's like there's like I think 2016, about 23rd of June. I can't, yes, 23rd of June, I did a research recently. So there was like a vote for Brexit, about UK Brexit. That gives political uncertainty. People started to move their money into gold, because it is seen as a safe haven. It is seen as a safe haven. People were unsure of what might probably be happening. So that is why the price went up. Now, as you can see, the research I did about, I think EU referendum, I did it, and I got this thing here. As you can see, as accounting officer for the WIGAN voting area at the referendum held on 23rd June 2016. You can see about 23rd June 2016, there was a referendum that was held. But one thing you see that our gold prices even rose massively. That was on 2016. Let's see it out because we see it as uncertainty when there's political or something that is happening that you are not really sure of that can shake in the economy, then you tend to move your money into safe haven, which is like the gold, one of the safe haven. Now, as we can see, 2016. This is 2016, by the way, and we are looking at June. This is 23rd of. I think this is where it is. This I think I guess. Please give me some time. Let me be able to highlight it for you. This is about 2016. This is about February. This is about June, by the way. Okay, this is it now. This is about June 2016. As you can look, see it 27th of June 2016. That is I've highlighted it. You can see the price is went up massively. I'm going to highlight it like this. We saw the price rose massively when there was at least that election. Price was a bit unpredictable and everything was going. You can see the price of that gold tends to move up. It pushes up very well. So I wanted to go. If you go to your chart, you can analyze it better. As I can see here, my MetaTrader is not working fine. So that is exactly what can happen. Uncertainty when there's uncertain movement, or probably there's a terrorist attack in a particular country, like maybe a UK or US, then you see that the price of gold tend to rise. And one thing again is that um during the Russian invasion, you see that Russia invaded about its neighbor about 24th of February. 24th of February, you see that when you go to your charts, our price for gold rose significantly. If you are to analyze it, go, you can check your price to confirm it. That is exactly one way price can actually move about on our gold. When there's an uncertainty in the price, we see that our price move up. I think, let's see if now it's working. Let's see if we can get it, which was about 2022, right? This is February. I would say 25th of February. This is it here. I think it was around this movement. We can see it here. This is 23rd of February, by the way. This is 23rd of February. You can see it. This is 23rd of February. The next day was 24th. As you can see, our price now rose up. As you can see that our price rose up because of economic uncertainty. People were not sure. People started moving their money into safe haven currency. And three safe haven currency is JPY, USD and gold, and you can see gold actually rose then. That is on our fundamental aspect of trading gold. Now, as we can see on our technical aspect, I'll just keep it simple because I believe most of you who have understand technical aspects. I'll just give you some tips and tricks, or some little analysis on our technical aspects. Now, on our technical aspects, we tend to use one thing: price action. As you can see, price action, and this price action, we tend to know the trend. That is first thing to take our gold. Before you take any buy position, you would want to know the trend of that movement on our gold. As you can see now, currently we are in 2022. What is the trend? Daily trend. Our price is actually falling, by the way. You can see that our price is actually falling. There's one thing actually to short it, by the way, and you can see it here. Our price was actually raising. You see higher highs, higher lows, higher highs, higher lows. When it is an uptrend, we tend to get higher highs. We tend to get, then this highs breaks our previous higher highs. We get this higher lows. Then this highs break our previous higher highs. When it is on a downward trend, we get this low. we get the lower highs, we get the lower lows, we get the lower highs. That is exactly what our trend move tends to move. It tends to fall when it's downward trend, and when it is an uptrend, you get have this higher highs and higher lows. So before you take your trade or you want to buy any trade, see it, is it moving up or is it moving down? So you will know. If you are to buy, you look at the uptrend. If you are to sell, you look at it if it is a downward trend. As you can see here, we are on a downward trend, so definitely we would want to be shorting this our position. But if it was previously, we can say okay, it is a good opportunity to actually take our buy. Next one is our